Hey guys, welcome to the Silver Gold Saver channel. Today's video is about the gold to silver ratio. So basically every week I'm going to talk a little bit about the money and markets, and also do a couple of videos about coin reviews or collecting. So I'll do a little bit about stacking, a little bit about the markets, and a little bit about collecting. So that's going to be the general format of this channel. Today I'm going to talk about the gold to silver ratio. So basically what that is how many ounces of silver equates to 1 ounce of gold. Now historically, for most of human recorded history, the gold to silver ratio has been 15 to 1 or less, represented by 15 eagles, silver eagles to 1 gold eagle. Now that has been true for literally centuries, right? So we're talking about Egyptian times to Roman times to even early United States times, right? So hundreds of years ago too. So that has been the ratio historically, and typically that ratio has been managed, right? So it's either by law or by decree or by custom that ratio held. And that typically has also correlated to the amount of silver to gold found on earth or mined from the earth. So for every 1 ounce of gold, you typically find between 9 to 17 ounces of silver. And so that's why that kind of ratio made sense on the physical market. So now remember that historically, there was no such thing as a COMEX or LBMA. There was no future markets. There's no paper markets. Everything was in physical. And so the physical gold to silver ratio made sense that it was close to the actual physical supply of gold and silver found on earth. Now the past, call it 100 years, the gold to silver ratio has averaged around 50, right? So these are for my tubes of 20 eagles. So this is 100, right? So 20, 40, 60, 80, 100. Think about this as just half, right? So the gold to silver ratio historically has been just half of this, okay? And that's through the Great Depression all the way to today, and that's kind of the average. If you draw a line over the past 100 years, it averages around 50. Now, over the past 50 years, that ratio on average has crept up to about 60. Now that includes a time when the dollar is no longer backed by silver or gold, right? So there's no more silver in our coinage at that time. There's no more gold backing of the US dollar. Okay, so that ratio has crept up to 60. Now, interestingly, over the past 10 years, again, if you look at the charts of the gold to silver ratio, that ratio has crept up even more to around 80, between 60 to 80. And so I want to know, so obviously today's ratio is 100 to 1. Actually today's ratio is more like 110 to 1. And in fact, the ratio, I think at one point hit 120 to 1. And that's kind of all-time high records, right? So clearly that ratio is too high, meaning that it's probably going to revert back to a lower amount. what I want to know is what you think it will stabilize at, right? So knowing that over the past, 100 years, it averages around 50. Over the past 50 years, it averages around 60. Now over the past 10 years, right, it averages around between 70 and 80. Where do you think the gold to silver ratio will end up? Either in the future, right? So if you think it's going to go down, where is it going to go down to? Do you think it's going to go back to 50, which is the 100-year average? Or do you think that it's going to go back to 60, the 50-year average? Or is it going to go back down to, set between 70 and 80, which is the 10-year average? For me personally, I venture to think that it will actually go down to close between 70 and 80. So I'm leaning towards the 10-year average. And the reason that I think that is, if you think about the markets over the past 10 years, it's very different from, let's say, even the past 20 years or the past 50 years. What I mean is that the US debt has doubled over the past 10 years. And I'm not talking about doubling from 1 to 2. I'm talking about, 8 trillion to 24 trillion. I guess that's tripling over the past, between 10 and 15 years. And it's increasing at a rapid rate, right? It's not geometric, it's not linear, it is exponential. And so I tend to think that the average over the past 10 years is more representative of the go forward gold to silver ratio than the average over the past 50 or 100 years. Now, that's not to say that the gold to silver ratio will not dip, right? So we know that gold leads in the increase and then silver follows. But silver also catches up much quicker, so meaning it'll spike higher. But if you think about it, gold is very close to its all-time highs of 2000, whereas silver is nowhere near its all-time highs of close to 50, right? So that makes me think that the ratio of between 70 and 80 is a more realistic ratio. And if you think about the premiums that you're actually paying on the physical, okay, so we're not talking about paper markets. Paper markets can obviously be manipulated and everything, and the paper markets are showing 100 to 10 right now. But can you really get 110 ounces of silver for 1 ounce of gold? I don't think so. I mean, I haven't seen it. I think just based on, again, American Silver Eagles to American Gold Eagles, I would say that the actual ratio when you buy it in physical form, taking into account the premiums that you're paying, the actual ratio is closer to 80. So please comment down below and let me know where you think the go forward stabilized gold to silver ratio it will be. Let me know why you think that, and please comment, like, and subscribe if you haven't already, and hope to talk to you again next week in the next episode of Money in Markets. Thanks guys, talk to you soon. Bye bye.